Hello, my name is Jeremy, and I'm an addict. I'm addicted to money. I love fast cars. I love buying stocks, but I don't love selling stocks. I don't know what it is. There's just something I don't like about it. I just can't do it. I need help. I'm sorry. Anyways, I don't know. I recorded that literally like 7 times, okay? And every single time I started laughing, I had to try to keep a straight face for it. We got a lot to get into today. That was serious, though. I am an addict, and I'm addicted to buying stocks, and I think everybody by now knows that. And I just can't stop doing it. And I bought stocks again today, okay? Another 20,000. I'm literally addicted. I can't, I got to increase my ownership today. Today, I gotta buy, okay? I want to talk about a lot in this video. I want to discuss a lot. I want to show you a lot what's going on in the market. I'm going to show you exactly what stocks I bought today. I'm going to show you, I'm going to give you my perspective on if I think this market's about to get a lot worse. I'm going to show you a graph that is, somebody sent me this on Instagram DM today. I looked at, and it was this graph that shows the trajectory we're on is very similar to 2008 right now. And so I want to show you that as well and kind of give you my perspective on that. Now, first off here, so 2022, today, we came back strong, but basically at the lows today, we were down over 25% on the Russell, small cap stocks now, 25%. This is no longer a small dip. This is no longer a good size dip. This is a monster 7-layer dip now at this point in time, okay? The QQQ, which is the NASDAQ, down 24% at the peak today. These sorts of drops come very few and far between. Do keep that in mind, but they do happen in the stock market. This is not the first time this has happened. This won't be the last time, but they do come very few and far between. The S&P 500 was down over 15%. The Dow Jones, the Dow 30, was down around 13% at the lows here today. To reference a fall of 2018 dip, it's interesting. So the Russell still, even at the peak of bottom today, was not down quite as much as we were in the fall of 2018. But what's interesting is the NASDAQ was actually at the peak down lower today than it was in that massive fall of 2018 dip, which is quite interesting. S&P 500 still a little ways off, and Dow 30 still a little ways off. By the way, thank you FTX for being the partner of the channel. As always, if you guys want to sign up for FTX, use the pinned comment, use my referral code Holy Smokas, and get yourself some free crypto when you start trading through FTX. 24/7 customer support there, okay? Now, this is the worst start to the year. B-Man sent me this today. Worst start to the year, and I've been covering this. I just never showed a chart essentially, but this is the worst start to the year we've seen, pretty much ever in the NASDAQ. I mean, it's been, pretty darn dramatic. Now, what you're seeing here, this looks like S&P 500 here, but what you would find the NASDAQ far worse than this, and I mean far worse than this. What you're seeing in front of you there, that's child's play, okay? That's child's play compared to what the NASDAQ's been down, okay? And so the NASDAQ's actually, through the first 4 months of the year, from what I found, the NASDAQ is the worst ever. I could not find a time period worse for the NASDAQ through the first 4 months of the year ever in history. That's crazy to think about. 2020, 2008, 2009, the tech bubble. I could never find a time period worse for the NASDAQ for the first 4 months of the year than literally the one we're going through right now. So that's pretty extraordinary to think about. But even for the S&P, worst start, for the averages in general, in decades. Think about that for a moment, right? And the interesting part of that is, it's not like necessarily company earnings are awful right now. We've seen a lot of companies obviously report numbers that aren't very exciting, okay? But it's not like we're in a situation where it's the end of the world or something like that. It's very clear, if you look at it from that angle. It's not like we're seeing, company revenues go negative. They're just not as exciting of growth numbers, right? Especially on a year-over-year basis with very, very tough comps. Look at something like Amazon, Google. Look at all the big tech, for instance, Apple, Amazon, Google, Microsoft, Tesla, all those big dog companies, right? They're all still growing, right? And some of them are growing, actually beating analysts' expectations. A few of them are not, right? And they're not beating those analysts' expectations, but they're still growing. I think that's very important to remember, that these are still growing companies, and we don't have a shrinking economy right now, although, the worry is that we can go into a shrinking economy. And that's why you're seeing such a rough start to the year this year. It's just been absolutely vicious. So as far as me, I'm like, Rocky, when they try to knock him out and he just keeps buying, okay? And he just keeps punching. And it's like, gosh, won't this guy just get knocked out? I'm just, I keep buying, man. I don't know what it is. I can't stop. I look at these stocks and, the countless stocks at 52-week lows, multi-year lows, all-time lows that I love for the long term. And I'm just buying stocks left and right. And I'm not going to stop. I don't care. I don't care what happens. It doesn't matter to me anymore. It doesn't matter recession, no recession, inflation, Fed. I literally don't care, because all I am very confident in is the shares I'm buying today are going to be massively higher a few years from now than they are today. What we've seen throughout history is all these short-term situations you go through: inflation, deflation, Fed pumping, Fed not pumping. No matter what, it's always a huge buying opportunity, especially for companies that have great long-term futures and have, exceptional revenue growth coming for them in future years, right? That have tons of growth ahead. And so that's what I like to stay focused on. So today, I bought 3 companies that I love for the long term. One's Amazon. I bought 2 shares, and I know that sounds like a really small amount, like 2 shares of Amazon. Dude, Amazon's a pretty high dollar stock, so it's still like almost $5,000 worth of stock, even though it's only 2 shares. Okay, I bought 1,000 Tattooed Chef shares at $771, and I bought 1,888 Honest shares at $391 here today. I look out there at the market right now, and for me, it's shooting fish in a barrel right now. I want to be very clear about that. Honest, Tattooed Chef, Planet, Amazon, PayPal. All these stocks I've been buying. Facebook, I bought some Meta here recently. All these stocks I've been buying, like, they're all shooting fish in a barrel, in my opinion. Maybe I'm wrong. Maybe the long term, those stocks don't work out, and they're not higher 3 years from now, 5 years from now than they are today. Maybe Tattoo Chef doesn't make it, right? And they're not higher. They're below $7, 3 years from now, 5 years from now than they are today. Maybe Amazon's $1,500 3 years from now, or 5 years from now than it is today, right? Maybe Facebook, it just keeps going. These are all possibilities. I think they're very unrealistic possibilities based upon everything I look into, and that's just my core belief. And so that's why I continue to buy these stocks. The short term is going to be the short term. And, I understand for some folks it's hard to continue to buy these shares when they just go down and down and down. But for me, I literally don't care. Like, it doesn't matter. All I know is I'm going to likely, the high probability, make a ton on every single share I've been buying. And yeah, I bought Chef at 9, and I bought it at 8, and I bought it at 7, I bought it at 10, and I bought it at 11, I bought it at 12, and I bought it at 13, and I bought it at 14. I don't care. Stock's going to 50 plus long term, in my personal opinion. Maybe I'm wrong on that, and it never does it. I'll be wrong. That's fine. I'm very confident that I am right, and that's why I continue to funnel money in. I'm very confident that Amazon's going to be, much higher a few years from now than it is today. I'm very, very confident that Facebook's going to become a multi-trillion-dollar market cap over the coming years. Very confident in that. That's why I continue to buy that stock. Very confident that PayPal is going to 2x or 3x over the coming years. That's why I continue to buy that stock. Honest, it's a joke right now at $4. Like, come on, man. Like, it's just silly. So I look at these companies, and I see deals everywhere. And if we get more deals, fine. I'll continue to buy. It doesn't matter to me. I don't need to perfectly time the bottom. I'm not playing that game. I'm not playing the game of I need to perfectly time the bottom, and if I don't buy right at the bottom, I lost. No, no one cares about that in the end. None of that stuff matters. All they want to know is, did you run up the numbers over the next 5 years? That's all people care about. That's all I care about. That's all that's going to matter to me. And whether I buy it at 7 and it goes down to 6, it doesn't mean anything in the end. It doesn't mean a dang thing. All that matters is where these stocks are going long term. And it's a hard thing to get through people's minds sometimes when you're in this sort of market that's very, very rough. But for me, I just don't care. It doesn't matter. I'm going to continue to buy regardless. I don't care. The market can go down 30%, 40%, 50% like it did in 08. It doesn't matter. I'll just keep buying and buying and buying and buying and buying. For me, it does not matter in the end. That's just what I do, okay? Next up here, the Fed. So if you don't know, on Wednesday, the Fed's going to likely raise, interest rates, okay? They're going to likely raise half a percentage point, 50 basis points. This is pretty known by the market. Now, will this make the stock market go down? Will this make the stock market go up, okay? So first off, everybody expects the Fed to raise rates 50 basis points. So if the Fed raises 50 basis points, and that's all that happens, I would say the market will either be neutral or it will go up. If the Fed raises more than 50 basis points or has any sort of super aggressive tone in their commentary, that would be a situation where the market would go down, because that would be unexpected. People would freak out, oh my gosh, they're raising 75 basis points, or they're super aggressive with their tonality, or whatever it is, right? That would be a very, very different scenario. So now keep this in mind, right? In March, we had inflation rate coming in at about 8.5%, which is just insane. And we've been going up month after month after month after month after month for a long while now, okay? Now, it has always been of my belief that April or May will be peak in terms of the rate of increase in inflation, okay? Based upon what I'm seeing in the real world, and also based upon the year-over-year comps and how tough those comps are to get up a year-over-year. And so what I believe we're going to see have either seen in April or we'll see it in May, is where the number starts to come down. It goes from like 8.5 to like 8.2 or 7 or 6 or something like that, which is going to be a massive sigh of relief. And if you're thinking about anything positive short term in the market, it would be a peaking of inflation, okay? Now, the new numbers are going to come out May 11th, okay? May 11th is when the new numbers come out. And if things are still increasing, that would obviously be a bad thing. And when I say increasing, I mean the rate of increase. So let's say we go from 8.5 to 8.9 or 9.2 or something like that. That'd be a bad thing for the market. That could shake the market up even worse, right? But I could tell you, once that trend breaks, it's going to be a massive, massive sigh of relief to the market. And I would put money on it that it's going to be, I don't want to say a boom for the market, but it's going to be so big I can't even explain it to you, like how big that is when we start getting that. Now, the even bigger thing will be when we get a second month of that rate of increase decreasing, and we get a third month. That's going to be the thing that really puts a nail in the coffin to if you're really, really negative on the market. Because then what the Fed's going to start doing is the Fed's going to start dialing back their aggressive tonality, and the Fed will start to become more of a help to the market, I guess you can say, rather than like a fear-driven thing, like, oh, they're going to keep raising rates. Then the Fed might be able to lay back and say, we're going to reassess. We're going to see if we need to raise rates anymore. Obviously, the rate of increase of inflation is coming down dramatically, and we're going to see, if we need to keep raising rates or not. And they'll be able to dial back a bit. Now, if simultaneously you get some real weakness in real estate, that can make the Fed dial back even more. And I think that's definitely a possibility this summer, where you're already starting. What's interesting is you're already starting to see some troubling real estate numbers. And to anybody that keeps up with real estate, you're seeing some troubling numbers already. And I can tell you, if we get into some sort of scenario where the numbers keep getting worse throughout the summer, the Fed's going to have to start backtracking, and they'll end up being in a situation where they have to start really dialing down the tonality and start becoming a help to the market rather than a hurt to the market, which is all they've been for the past many, many months now. They've been a hurt to the market. And so that's a scenario that is very, very bullish for the back half of the year, which fits Wall Street's narrative. Because if you paid attention, toward the end of 2021, essentially, to the commentary of Wall Street banks, investment banks, Wall Street in general, they all said the first half of the year, almost all of them said the first half of the year they expect a lot of volatility. They expect probably a bad market, right? With a pickup of the market coming in the back half of this year. And so if that's a scenario, it will have fit Wall Street's narrative to perfection. And Wall Street will be able to say, see, we were right about that. So it all just kind of fits the whole agenda of everybody that wants that agenda to be hit. And so it all starts, you start putting these pieces together and it all starts making sense, right? So that's coming up, right? Now, I want to talk for a moment about if this market could get dramatically worse, because, somebody sent me this on Instagram. Like I said, sorry, they sent it like a really small image, so, it's not like the best quality as far as the image goes. But they showed 2008, kind of how the market was moving, and then they showed 2022, and a very similar trend. But, notice things get a lot worse there, okay? Now, let's talk for a moment and be real about this. Like, it's one thing to see, because being in the stock market for 14 years, I've seen so many dang charts, and it was like this and this and this, and then it never plays out that way, okay? But what would it take for this scenario to actually play out and we drop down here, okay? So the first thing you got to understand is, if you're going to get the market to do that, you need to get the economy to tank. I mean, tank. I'm talking high unemployment. I'm talking Fed still working against the market even as unemployment continues to climb and climb and climb, which, remember, if you remember, the number one thing the Fed always talked about, right, was maximizing on employment. So if unemployment rate starts to jump and jump and jump, guess what the Fed's going to do? They're going to dial back big time. They're going to dial back big time, okay? So in order to get that sort of drop, you need to have devastation happen in the economy, okay? And you need to have the Fed not really help. That's how you got the stock market. How did the stock market fall over 50% for the indexes in, from the 2007 to 2009 crash? That happened because we almost lost the entire financial system, and there was economic devastation. Massive amounts of people lost jobs. People couldn't get loans to buy anything. Credit dried up. It was ugly times ugly times ugly, okay? And so if you're talking about the market going from down, like we at the peak today, where we're down 24% on the NASDAQ or whatever, and talking about the NASDAQ dropping another 24%, it's definitely a possibility, but you need economic devastation. You need housing to crash. You need massive amounts of jobs to be lost. I'm talking by the millions of jobs to be lost, and you need just a flood out of all assets, which we've already seen a flood out of all assets. That's the only way you get that sort of situation to happen. You can't get down 50% plus without the economic devastation. We've never seen it in history. If you're trying to bet on things to have happened that have never happened in history, that's a tough game to play. The only way you can ever see the S&P 500, for instance, fall 50% plus was when there was economic devastation. Okay, that's what you got to see. And if you look back throughout history, the only time the S&P 500 ever fell 35%, 45%, 50% was when we had economic devastation. The last time this happened was March of 2020, right? And the S&P 500 fell about 35% in a snap of fingers. Why did that happen? Well, we were shutting down the economy. Unemployment went to numbers we haven't seen in decades, right? That was incredible. Like, we hadn't seen unemployment really climb like that for, probably since the Great Depression at the peak there. It was insane. And so that's how you got to that place, through the economic devastation. So the only way a situation like this happens is if you get the entire economy to collapse. If that happens, yeah, we'll go through another 2008. If that doesn't happen, we'll likely bottom, soon. I'll just put it that way. So we'll see how it all plays out. I don't want to try to predict what will happen there. That's a tough game to play. Anyways, hope you guys enjoy this. As always, make sure to check out FTX US, the official crypto partner of the channel. 24/7 customer support, 85% lower fees than competitors. Use Holy Smoke as your referral code. Much love and have a great day.